And joins into our discussion. He's the President and Head of Research at IIFL Institutional Equities. Prabodh, hi, good morning. It's been all about earnings so far, and the earnings have been weaker than what the street was estimating. Do you expect more downgrades to flow in now?
Yeah, I would say the result season, the 2Q result season has begun on a mixed note. I wouldn't say it is a disaster. It is a mixed set of numbers. In fact, just to share a few numbers with you, IIFL covers about 185 companies. And these are, of course, largely the large cap and the mid cap names. And half of the companies have declared their results so far. 40% of the companies that have declared results so far have reported better than expected numbers. 40% are below and about 20% are in line with our expectation. So it's quite a mixed set of numbers. But more importantly, if you look at the sectors which have surprised on the upside, that includes a wide range of industries. It includes, of course, private banks, NBFCs, some of the infra companies, auto companies, tech companies, media companies, refining companies. So it is, a positive surprise on a wide range of industries. Of course, we have been cutting earnings for the last 5 months. In the beginning of this financial year, we were forecasting an earning growth of 16-17% for Nifty. That currently stands at about 8%. So we have sharply cut down the earning estimate for the current year. Whatever recovery that we were expecting in the current year has not materialized so far. And now the expectation is that probably the recovery is going to happen in FY17. So rightly, because we have been cutting numbers, the market is very skeptical, investors are still skeptical, and we do not really have a clear handle whether the recovery will be as strong as we are expecting in FY17. But I think, there are signs of recovery. A skeptic may choose to ignore these. A more optimistic person would say that, there are enough signs on the ground to suggest that things are improving, and in the next 2 or 3 quarters, these recoveries will show a stronger trend.
But how much have you cut your earnings by, Prabodh? For that, 180 companies you said? 175 companies?
Yeah, so as I said, we have cut our earnings from 16-17% in the beginning of the year. Now it's down to 8%. Okay. So that is the extent of the earning cut that we have done. For FY17, we are forecasting about 20% earning growth. Now, as you can expect, there's a lot of disbelief in that number, the FY17 number. But as I said, the base has been low. We have had, 5-6 years of, weak set of numbers. Earning growth has been in high single digit or low double digit. And therefore, the recovery, whenever that comes, would be, would allow, very high growth. And we are not just talking about 1 year of recovery, but we are talking about multi-year of, high teen or a 20% plus kind of earnings growth.
What about the power reforms that were announced yesterday, Prabodh? Did that enthuse you in any way?
See, of course, this is the step in the right direction. This was required. We know that the power sector is in a very bad shape. The PLF of the existing thermal power units is currently at 60%, which is an all-time low. The state electricity boards are resorting to load shedding instead of buying power and supplying to people. So obviously this situation cannot last, and the government's promise of a 24/7 power by 2022 is definitely not achievable. So of course, this is a right step in the right direction. But of course, what we got to see is the execution part. Why there is still a bit of skepticism in the entire investment community is because of what happened to FRP1 in 2012. Okay. There were very few takers for that, and while we expected the T&D losses to come down, we expected the tariffs to go up, but that did not happen, and the losses kept on mounting. Now this is FRP2. Again, the actual execution, whether the states are serious about bringing down the T&D losses, about raising prices, and meeting the 2019 target of eliminating all the losses.
Yeah.
So we'll see. Many of these states are actually ruled by the ruling BJP party, and therefore I would think that this time there should be much more support and much more coordination between the centre and the state to implement this package.
Okay, Prabodh, just hang in there. We're getting some corporates as well joining us, and we would like your comments as well on their performance. At the moment, we've also got the Bank of Baroda slippages, and that's huge. It's a 300% rise or 350% rise to nearly 7,000 crores. But separately, Mr. Ravi Gupta has been waiting patiently, the CFO of Jubilant Foodworks, and he joins us now. He's also speaking about a wage inflation in urban areas. What's the sense? Is urban consumption here? Is that part of your portfolio, part of your incremental portfolio?
Yeah, actually, I think, of course, we know that the consumption has been weak for a while, especially the rural consumption, which is not surprising given that we have had 2 successive poor monsoons. Having said that, there are pockets of recovery in consumption. Let me just give you a few examples. Passenger car sales have been recovering. Now they are in mid-single digits. Commercial vehicle sales have been very strong. That is probably shows a pickup in the mining and the industrial activity. Then you look at, for example, your mobile data revenue is growing very strongly. Your ad revenue, especially the TV ad revenue is growing very strongly. Office absorption is up 20% YOY, and it is going to be up 70% over the 2013 levels. Toll road collections, which is a combination of passenger traffic movement as well as goods traffic movement, is up some 14-15% YOY. Tax collections have been buoyant. These are some indicators. Some of these are consumption driven, some of these are industrial driven. But I see that these are the early signs of a recovery. And of course, the input prices have fallen, which is also helping the consumption demand. Across the FMCG segment or across the consumer discretionary segment, we have seen a sharp decline in input prices, and that has resulted in higher GPM for many of these companies. So that should lead to probably better consumption recovery. Interest rates have come off very sharply in the last 6 months.
Okay. Well, there's some more details coming in from the Bank of Baroda press release that will also flash for you. We told you about the fresh slippages, which was quite high at 6,810 crores. That the bank says reflects continued stress in the corporate portfolio, both in the domestic and the overseas loan book. So there is continued stress there. The restructured assets of the bank have come in at 22,930 crores as on 30th September, as against a level of 25,541 crores in the previous quarter. So the restructured assets fallen slightly, still elevated levels, but 22,930
chances are they have
crores.
Gone into the NPL category.
Okay.
I mean, possible,
yeah.
because the restructured, the NPLs have gone up so much. Well, any other highlights? Sorry.
But no, that's about it really. But I wanted to ask Prabodh about that. Prabodh, there's been no recovery in the PSU banks just yet, and we're getting some very disappointing numbers from the likes of Bank of Baroda. Does that make private banks a little more attractive, or now would you even start to worry about certain asset quality chinks there too, the likes of, Axis Bank, etc.?
Yeah, see, the asset quality issues in PSU banks have persisted for a very long time. And I don't think we have seen the worst of it. I would think that there are still a lot of problematic assets which are yet to be recognized as NPA or restructured loans. So I think this problem will continue for a while. Of course, not all private banks are clean. Some of the largest private banks also have their fair share of such stress loans, which have very large exposure to the infra segment, especially the power and the metal segment. So they will also have similar problem. That is reflected in the valuations and the performance of these banks. But I think private banks which are focused largely on the retail side will continue to do well. I see very strong loan growth, significantly higher than the sector average, strong fee income growth, reasonable provision charges, and therefore, sort of net profit growing at anywhere between 20 to 30%. So overall, we still remain very positive on the entire private bank and the NBFC space.
Okay. Prabodh, we'll have to leave it at that. Thank you very much for joining us with your take on so many issues and, of course, on the earnings picture in general. Thank you very much for joining us. Okay, we'll take a break. We haven't done that in an hour. But remember, this Diwali, we are bringing you, our viewers, a unique opportunity to learn